Welcome to the Hurst Trading Room. My name is David Hickson and this is a video update for the 20th of April 2015. As always, before we take a look at the markets, please make sure that you have read and understood these disclaimers. If you are seeing this video anywhere other than on our podcast channel, then make sure that you subscribe to our podcast channel on either iTunes or YouTube. In that way you will be notified when I publish a new video. Let's take a look at the markets. And I would like to start with the S&P 500. Now, I've been discussing this analysis over the past many weeks, months. I pretty much look at the S&P 500 every week, and so I'm not going to go through all the details. As you will know if you've seen my previous videos, I believe that there are two possibilities. And here is the first possibility, that the 20-week cycle trough occurred in the second week of March. That's the 20-week cycle trough over there, according to this analysis. Prior to that, of course, in the middle of October, there was a long cycle trough of either 18-month magnitude, perhaps only 40-week magnitude, but certainly a longer cycle trough in October of 2014. Now, the alternate analysis, or the other possibility, is this one over here. And let me just zoom back a little bit and get rid of that VTL and FLD for the moment. There we go. This is the other possibility. The main difference between this analysis and the previous one is that the 20-week cycle trough, according to this analysis, occurred at the beginning of February. 2nd of February. As you can see, I've had to pin that. You can see that little pin symbol on the chart, which means that I have influenced Sentient Traders analysis in order to get it to position the 20-week cycle trough there. And as discussed in last week's video, I believe that it is likely, if this is the correct analysis, that the 80-day cycle trough is indeed behind us. And here we go. You can see in the first week of April, there's the 80-day cycle trough. So, of course, as discussed in last week's video, that means that there are two possible things that are happening right now. And I mentioned that I would approach the next interaction, which is now, of course, the current interaction because it's busy happening, that I would approach that interaction between price and the FLD with a little bit of caution. So let's just go back and have a look at that and discuss it in a little more detail. Here is the analysis with the 20-week cycle trough in the second week of March. And if I zoom in and display the FLD, and let me freeze that, there we go. Now, you can see the problem here. Here is the 20-week cycle trough according to this analysis. Let's look at our interactions. Here's the A category interaction, a good interaction, if a little disappointing because it didn't quite achieve its target. Here is the B category interaction, slightly unusual B category interaction in that price dropped down below the FLD. But it didn't go down very far, and it then sort of tracked along the FLD but a little bit below it, which is fairly bearish. I've discussed that in previous videos. And it's not impossible as a B category interaction, so far things are looking okay. Over the Easter weekend, we saw our C category interaction as price broke back up above the FLD. That means that, of course, our next interaction is a D category interaction as price drops down below the FLD, which should give us a good profitable short trade. Now, in last week's video, I discussed this, of course, because I was looking ahead to the D category interaction, indicated that I was interested in entering into that short trade. However, I would approach it with some caution because of the alternate analysis. And when I approach trades with caution, what I do is I don't enter the trade at the level of the FLD. So in fact, I did not enter this trade at that level because I had some question marks in my mind. I wasn't absolutely convinced that this was going to be a good D category short trade. I hope that you've been watching these videos and you've been hopefully learning from some of these ideas. And when I'm very confident about a trade, I will, of course, enter at the level of the FLD because I have complete confidence in the trade. If I don't have complete confidence, then I will tend to wait a little bit, which is what I've done in this case. So I waited, I didn't enter the trade. Now what do I do? Well, now I need the market to show me what is happening. And as you can see, so far the market has bounced back up again, and it looks as if though perhaps the whole crossing of the FLD on Friday was a bit of a mistake, and it didn't really mean to do that. Now, according to the other analysis, there is the danger that this is a B category interaction where we expect price to come down to the FLD and then to pretty much straddle it and keep moving along with it, in which case we don't want to be in a short trade. It's very easy to take this approach to the markets, and we have an obvious entry point into our short trade. If this is going to be a short trade, then I would be interested in entering at the low of Friday's trading, because if the market drops down below there, then clearly the market intends to continue in that direction. However, there's a very important consideration to make here. That is that this is a D category short trade. And our D category short trades, you should know, if you know anything about the personality of the interaction between price and the FLD, D category interactions tend to very accurately achieve their targets before bouncing back up again, and then you're in an E category long trade. So where is this target? Now, looking at this chart with the level of the FLD over here, there is clearly the level of the FLD. That's where the price cross occurred. Here is our initial stop loss, which I normally label ISL. And so that initial stop loss was somewhere around about 21.05, I think. And our price cross, according to that, roughly is about 20.74. So we're looking to move down to the early 2040s, down somewhere over here. Let's say about 2043. So that would be our T2. Okay, for our move down. Now that still looks like a good trade. If we enter at the low of Friday, there's still a little distance to travel. However, that reasoning is severely flawed, and I hope that you're paying attention, because it's very, very important, this point that I'm about to make. When Hurst spoke about price interacting with the FLD, he was speaking about median price, which is the mid price between the high and the low of the bar. Now, when we trade according to the FLD trading strategy, we enter trades at the level of the FLD, unless, of course, you have some reservations about the trade, as I do at the moment, in which case you delay that entry. But the important point is the level at which the median price crosses the FLD, because the FLD itself is based on median price. So let's have a look at the median price. We can plot the median price very simply in Sentient Trader by asking it to plot the median price. There we go. And so that is the median price. Now, of course, the current bar is not complete, so we don't know where the median price is yet for today's bar. If price drops dramatically during the course of today, then of course the median price will go down. If price suddenly jumps up tremendously, then the median price will go up. So there's an important subtlety, which is that we only know the median price of a particular bar after trading for that bar as complete. So after today's trading, we'll know the correct median price level for today's bar. But nevertheless, we can see a rough estimate for where that median price is, and you can see the median price is now crossing the FLD, and it's crossing the FLD at a level of about 2084, very roughly. So that changes our target. You must remember the T2 target is calculated on the basis of where the median price crosses the FLD. Now, in Hurst signals, of course, you are given a forecast T2 target. As part of trading using the FLD trading strategy, you will know it is a very important part of the Hurst signals course. You have to adjust your T2 target after your bar of entry. In many situations, perhaps even most situations, your T2 target does not need to be adjusted, but in some situations it does. And so where is indeed the target for the current D category move, if it is a D category move? Let me display the candlesticks again, and there we go. Now, Our initial stop loss was somewhere over here. Let's call it 2105. And as I've just mentioned, the median price might only have been at a level of 2084. Okay, I say might because we don't know. Oh, my pen is giving severe problems today. That's meant to read 2084. We don't know yet the exact level of the price crossing, but as I'm considering this trade today, it looks as if the median price crossed the FLD at the level of 2084. So what does that make my target, my T2 target? Well, my initial stop loss is 2105, my price cross is 2084, which means that my target is 2063. Now, do you notice something about Friday's price move? It came down almost to 2063. Let's have a look and see where it did come. I can simply double click on the chart and see that the low of the day was 2064. So to get back to my initial point about how D category short trades very often accurately achieve their targets, I am now considering entering a D category short trade, if that is what it is, and I'm considering entering at the level of Friday's low, which was 2064. I would probably leave a few ticks, maybe enter a little bit below that at 2063 perhaps, and I'm looking at a move down to a target of 2063. So this trading opportunity has just disappeared for me, and sometimes that happens. The D category move is complete. According to this analysis, it's simply not happening. And so I hope that makes sense to you. It's a fairly subtle reasoning, but it does happen. And Friday's move looked very strong, very dramatic, and it really looked as if though the bear market had come in and the markets were turning down. Well, perhaps they are turning down. Perhaps that bear market has finally arrived. But in terms of trading, the FLD trading strategy, the D category short trading opportunity that I was considering last week has fizzled out. If I don't take it, yes, I might miss the best trade of my life, but to be honest, I'm not willing to take that risk. There will always be more trading opportunities. Now, let's take a look at the alternate analysis. Here it is. This analysis, let me zoom in over there, tells me that I am expecting a B category interaction, and let me just explain why. Here is the 80-day cycle trough. Now, if you're not familiar with why I'm placing that 80-day cycle trough in that particular position, then take a look at last week's video, read a blog post that I wrote about it over the weekend on the hurstcycles.com website. But I believe that is very possibly the 80-day cycle trough, or perhaps it was a few days earlier at the beginning of April. But in any case, this is the A category interaction then that followed that trough. A very good A category interaction because it achieved its target and it exceeded it, which is what we expect from an A category interaction. So already this is looking quite good to me. As mentioned in last week's video, that means that I was expecting a move down to the 20-day FLD, after which point I expect the price to track along the FLD until the C category interaction, at which point, of course, we have a potential long trading opportunity. So according to this analysis, I'm not interested in entering into a short trade because I don't trade the B category short trades. And if you don't understand that, then please make sure you take a look at your course on the Hurst Cycles Trading Academy, which explains all of that in great detail. So the trading opportunity that I was considering last week has fizzled out. The D category trading opportunity looked good on Friday, but then it sort of disappeared. And I'm not really that interested in it anymore. You need to keep on your toes. What is the next trading opportunity? The next trading opportunity actually is potentially a long C category trading opportunity, if this is the correct analysis. If this is not the correct analysis, then what is the next trading opportunity? Let's go back to that chart. It's not really very hard if you know your alphabet. The next trading opportunity is, of course, an E category trading opportunity, also a long trading opportunity. So from thinking about taking a short trading opportunity last week, I'm now thinking about taking a long trading opportunity this week. That's how it works. That's how trading cycles works. Obviously, as time passes, your trading opportunities change. You mustn't get too fixated on one particular idea. So I am considering a long trading opportunity. Am I interested in that long trading opportunity? Well, let me zoom out here, and there we go. Let me go to that view over there and remind you of this 20-week VTL that I spoke about in last week's podcast. I recorded a very quick podcast on Tuesday last week. I spoke about the meaning of the fact that this 20-week VTL has been breached. As you can see over here, it was breached, and it was breached again on Friday. Now, that means, in theory, that we have seen the peak of the 40-week cycle. In other words, price is not going to get any higher. Let me actually do this on the other chart, which many people I know feel is more likely to be the correct analysis. So let me show you how the analysis doesn't really make a huge amount of difference in this particular discussion. There's the 20-week VTL. It has been breached. That 20-week VTL having been breached tells us that the 40-week cycle has seen its highest price, which was obviously this price over here. That's in theory. But and it can sometimes be wrong. Sometimes you do see higher prices. The markets aren't perfect. However, in terms of considering a long trading opportunity next, I have to tell you that I am going to keep that in the back of my mind and be fully aware of the fact that the markets are not expected to get much above that peak. So let's just take a look at what we could expect from this long trade, which might be coming next. Here we go. The 20-week VTL tells us that the peak has been seen, which means we have a bit of a ceiling over here, which is somewhere around about the level of 21.15. Here is the level of the FLD. I'm certainly not going to jump into this trade today. You must remember our guidelines for trading on a Monday, which is that on Monday the markets are often fairly volatile as the markets try to find their level. I wouldn't be at all surprised to see price touching that FLD today. If it comes back up above it a little bit today, I'm certainly not going to be interested in getting into that trade today, but I am interested in considering entering into a long trade. So let's take a look at the 10-day FLD, and let me highlight that FLD. And you can see the 10-day FLD is often used for entries into C category trades, and that provides us with a slightly better level. I certainly would not be entering at the level of the 20-day FLD today. I might consider an entry at the level of the 10-day FLD, but personally I would prefer to get in at the level of last week's high, because the markets are fairly volatile. We've started seeing some bearish cracks appearing. I wouldn't be surprised to see the markets come back up to last week's highs and then come back down again. So a potential entry level would be at the level of last week's high, which is around about 21.05, something like that. But remember that our upside is limited on this trade. Because we know, because of the fact that the 20-week VTL has been crossed, that we are not expecting to see a higher peak in the current 40-week cycle. So is that a really good trading opportunity? In my opinion, it's not. If you are familiar with getting into the market quickly and getting out again, and you want to get in there for those 10 points or 15 points, then by all means do so. But I should point out that I believe the upside of the next potential long trade is fairly limited. I don't expect it to go very high. What does that mean? It means that actually in the S&P 500, I believe now is the time to step aside just a little bit, give the markets a little bit of room. There's a final subtlety that I would like to point out here, and that is this. Here we go. Let me just get rid of that 10-day FLD. A final subtlety is that if this was the D category short trade over here, let's say that was D, then next of course would be E. As I've just mentioned, that is not expected to be a fantastically profitable trade. Of course, we might be surprised, but I don't think it's a trade worth taking. However, if price does get back up above the FLD, then the F category trade, which is coming next, is the one that I would be very interested in taking, because I think that the markets are beginning to show some serious bearish tendencies, and a short F category trade would be one I would be very interested in taking. It wouldn't be completely out of the question that the market, if I clear that and let's zoom in even further and take a closer look. I don't know why this video recording program has a tendency to switch windows. There we go. Okay. I wouldn't be at all surprised, considering the fact that I'm not expecting a very, very big bullish move. I wouldn't be surprised to see price coming along, touching the FLD, fiddling around and not really going anywhere. Perhaps not giving us a good opportunity to get into the short F category trade. So under those circumstances, I might consider an entry at Friday's low, but certainly not today. I'm not jumping into the D category trade at that level, but I might consider entering into an F category trade at that level. Let's very quickly take a look at the euro to US dollar, and there's been some interesting things happening in the euro to US dollar. First of all, here's the analysis that I've been talking about over the past many weeks. The potential is that this is a very long cycle magnitude trough, although I'm not convinced yet. As I've mentioned, I have wanted to see how the first 40-day cycle plays itself out, and here it is. You can see here's the 40-day cycle. Let me draw the M shape. A good clean M shape for the 40-day cycle. Here are the bar counts. That's 38 and that's 7. So that makes that a 31-day 40-day cycle, which is by no means impossible. It looks like a very good possible 40-day cycle, which would of course place the 40-day cycle trough over there. So that's all looking very good, and we've seen price bouncing out of that 40-day cycle trough. Now, what is the shape of that 40-day cycle? And I've just sort of scribbled all over it, so let me quickly draw it again. Here it is, the M shape. What is that? Is that bullish? Is it bearish? Well, the truth is it's neither. Okay, it's what I would call a neutral cycle shape, because it has an early peak. You see that the highest price is at the first peak of the M, so that's an early peak. It's before halfway through the cycle. So that is a slightly bearish sign, and the slightly bullish sign is that the closing trough of the cycle ended higher than the start of the cycle, so that's slightly bullish. So it's slightly bearish and slightly bullish. In other words, it's neutral. Now, it's not impossible, not even really very unusual, to see a neutral shaped cycle following a very major, very important trough. The tendency is to expect, following a really major trough, to expect the markets to bounce up with tremendous speed. But in fact, what often happens, and you can have a look for yourself at markets that have done this, what often happens is that a market will form a trough, then it will form really pretty much a neutral shaped cycle, indicating that the trough could be either at the first trough or the second trough, and only then will it take off. So it is still possible, in my opinion, that the euro to US dollar is going to take off, but I'm not putting all my eggs in one basket. I'm not absolutely convinced yet. I'm not completely convinced. I'm not going to rule out the possibility, but I'm certainly not jumping in with everything I've got into the euro, because it's quite possible that it's going to continue going down. And certainly today's action isn't looking particularly bullish. But there's a very interesting detail here that I would like to discuss, which was highlighted for us in Hurst signals. And here we go. This is the euro for US dollar. This is Hurst signals for Friday. All right, so you can see the analysis. Here we go. The analysis was performed very early on Saturday morning, the 18th of April, after the markets closed on Friday night. And you can see this is giving us the FLD levels for Monday, the 20th of April. It tells us to bear in mind guidelines for trading on a Monday. But and you can see here the sequence, A, B, C, D, and of course next is the E category long trade. Now, I've been saying for some time that I'm expecting a really big trough, and you can see in the Hurst signal system that trough is a 40-week cycle trough, and I've been saying that I'm going to watch the first 40-week cycle before I do anything, which of course implies that I'm going to take advantage of an E category long trade. So I've been sitting here watching the 40-day cycle. It's turned out to be a neutral cycle, which means that we might have more bearishness ahead, or we might have bullishness, so I'm still in two minds about it, but I would be interested in taking this E category long trade. So the E category long trade is next, and you can see the Hurst signal system tells us that. It says the most recent price and FLD interaction is probably category D, and the next price and FLD interaction is expected to be category E. But it then tells us that no trade is recommended. Oh, I've crossed that out, which wasn't very helpful. I meant to underline it. No trade is recommended because T1 at a level of 110, which is over here, is beyond T2 with an entry at 108,480, which is of course the high of Friday's bar. That would be the entry. So why is that? It's because of the fact that the FLD keeps moving, of course, during the weekend and has come down over the weekend, which adjusts our target. So let's go back to Sentient Trader. This has become a bit of a theme of today's video. Here we go. Let's highlight that. Remember that we are trading price crossing the FLD, interacting with the FLD. The target is calculated on the basis of median price crossing that FLD. Now, here is the weekend, and we can see already Monday's trading prices. Price has been moving down fairly hard. It's not necessarily a very meaningful move yet, but is it possible that price could come all the way down here? Yes, of course it is. That would be a really big move, but it's not an impossible move. Take a look at that move on that day over there. Okay, it's by no means an impossible move. Price could come all the way down here. We could be entering into new low territory. And so if that was the case, then where would median price cross that FLD? So let me display this chart with median price, and there we go. Now, as you can see at the moment, using the evidence that Sentient Trader has of today's price action, at the moment the price cross is over here, just a little bit below 108, which would then give us I can't remember where this trough was, let's call it 105.50. That would give us a T2 target very roughly over here, okay, just above 110. So what's wrong with entering at a level of 108.50 above Friday's high? Because you've still got all this profit to make. Yes, that's if the market doesn't go any lower. In other words, that's if the median price does really cross at that level. Let me play devil's advocate, which is fairly important to do when you're considering entering into a trade. And let's say that the median price for today ends up way down here. There we go. Let's say the median price ends up down there. So in that case, our median price comes down. I've drawn that really badly. Let me draw that again. There we go. Let's say median price is down here. So then median price would in fact cross the FLD way down here at this level at 107, and therefore from 105.50 to 17 gives us a projected target up to about 108.50. And if we're entering at above Friday's high, which was about over here, we are going to make a very small little profit. Do you see that? It's a really important point, and that is why the Hurst signals system has been tracking or recommending this E category long trade. It recommended it throughout last week, and it kept saying, oh, good E category long trade coming up, and then suddenly on Friday it said no trade recommended. No trade recommended because T1 is beyond T2. And the reason why T1 is beyond T2 is because Sentient Trader is trying to work out where that median price might cross the FLD. Now, if price continues upwards, then of course the median price would have crossed at a much higher level. But we don't know that yet. And on Friday, Sentient Trader and the Hurst signal system didn't yet know the level at which the median price was going to cross the FLD. And so it plays it safe in order to protect your profits, and it will not recommend a trade which might be a questionable trade. And so far today, it certainly looks as if that was a sensible approach, but of course we don't yet know. Now here's an interesting subtlety, and if you really want to get into a long trade in the euro to US dollar, you still could, and let me end this video by explaining how you might do that. Let's assume that you think that this is a good analysis, and that's the A category interaction. Here's the B category interaction, price tracked along the FLD very nicely. C category interaction over here, it just broke up above the FLD for literally one bar, one day, then it plunged back down again. That's the D category interaction. That's all fairly straightforward and looks very good. Here is then our 40-day cycle trough, which according to this analysis probably formed on the 13th of April. And now we're looking at an E category interaction. The fact that we've had a bearish price move today does not necessarily negate that E category interaction. It could still be an E category interaction. But we haven't jumped into it, of course, because price crossed the FLD over the weekend and we don't know the level of that price cross. But here's what you could do. You could, at the end of trading today, have a look at where that bar ends up, and then have a look at your median price. Let's assume that the trading ends at pretty much the same level it is at now, and in that case our median price would have crossed at that level over there. Call it, if this pen will let me write this, 107.75. Let's assume that roughly. Alright, then you can say that is where my price cross was. So now I can calculate my target. There's that at 105, 250 perhaps roughly for the initial stop loss. And so that price cross then gives us a target 1.10500, roughly around about there. So that's our T2 target. You could potentially set an entry level at the level of today's high. So that could be your entry price. And if price gets back up to that level, then you are looking at making a profit all the way up to that T2 target. That's a bit of an advanced application of the FLD trading strategy, but you are following the principles of the FLD trading strategy. You are calculating your targets on the basis of where price actually crosses that FLD, and that could turn out to be a profitable long trading opportunity. If you are becoming experienced at trading the FLD trading strategy, it might be something that you want to consider doing. Thank you very much for joining me in the Hurst trading room today. I wish you profitable trading and look forward to seeing you next time.